Hey, good morning, everyone, in leading California world. Today we are on our second episode, already week two of Money Matters, and I've got my host, Monty Feltz, and I am missing my other host, Terry Gilliam. He is actually traveling, so we're filling in for Terry. Terry, we're sure you're going to watch us. So, hey, Terry, I hope you're having fun with your family and your travels. So, good morning, Monty. How are you?
Great. Yeah, doing good, David. Thanks for having me again.
This is going to be an exciting show. We're going to continue on this journey of explaining what's going on. When you're buying a home, money matters every
Mm.
week. And honestly, Monty, I'm sure would tell you he's an amazing coach. He would tell you that money matters every day. And sometimes it matters up to the hour. But we want to update you each week and we want to give you what's trending, what's the new, what does money look like right now in relation to homes. And I'm going to share a little bit about the realtor side and relocation side of how to choose a really good realtor. And then we're going to talk a little bit about California. We'll fill in for Terry, but Monty, go ahead and take it away. And what's going on with Money Matters this week?
Yeah, thanks, David. So, some updates for everybody on what is happening in the market. We got Consumer Price Index (CPI) last week, and that was cooler than what we expected for inflation. But as you know, the Fed's been working really hard to try to tame inflation. They've been raising the Fed funds rate, which is the rate that the government gives for borrowing money overnight to banks. Like, that's the simplistic way of thinking about it. They've raised that 11 times from March of 2022 to July of 2023. So all of these hikes were designed to slow the economy down, making borrowing more expensive. They were trying to create a lower demand for goods and thereby reduce that pricing pressure and inflation. So we've been making really good progress. We didn't make quite the progress that the Fed wanted to see at the early part of this year. So they didn't start lowering those rates. It was still higher than what they wanted it to be. And so they've paused raising the rates, but they've also paused lowering the rates. With April's numbers being cooler than expected, that was really a welcome sign that inflationary pressure is going to continue to ease as we move forward in the year. So everybody's saying, hey, rates should be going down. The election's coming. Yes, yes. All of this is lining up that way. So that's a really nice thing. We also saw producer price index, PPI. You got CPI and PPI. That came in, that measures inflation on the wholesale level. That actually rose a little bit. It's a little bit hotter than what we expected. Uh, it looks more significant on the surface, and that's what we saw the media do last week, grab onto that. But then we went back and saw some revisions to the previous report from March, and it was actually tamer than what we thought. So it was really a big difference in what was announced, and the year over year figures came in really as expected. And so it's in line with what the Fed wants to see. So that means that that's not very concerning. Another thing we saw was the home builder sentiment, the home builder confidence index. This is how confident home builders are in the market. The share, his quote from last week was, the market has slowed down since mortgage rates increased, and this has pushed many potential buyers back to the sidelines. He added that builders were concerned about some recent code rules, and that could lead to increased costs, which also impacts that sentiment overall. So we did see it go down below 50%. That's the threshold we like to see that at. So any score over 50, that score is from 0 to 100. So any score over 50 signals that more builders view conditions as good than poor. So we had a little bit more on the builder side saying that conditions were not as favorable, and that's okay. The other thing we saw was housing starts. So how many housing starts we saw, and the permits that people are pulling, these builders are pulling for housing starts, those were actually lower. So housing completions, though, on the other side, those rose, but we saw that it was softer than expected on that construction activity this spring. And so what that means is it could limit the supply down the road, and that really bodes well for appreciation and shows that opportunities remain to build wealth in real estate. It's still a really good thing. Home values are still holding. We're seeing that appreciation trending, like we talked about on last week's episode, quite a bit. And then the retail sales, we're starting to see a slowdown there. So that's kind of nice. Maybe consumers are reining in their spending. We talked about the sadness last week of what we're seeing as far as consumer debts go. I think the number last week was worse than what we're seeing now projected. So we see a pause in spending last month, which was a miss actually on the estimates, as the forecasters they predicted a 0.4% gain. But credit card balances are still at 1.1 trillion as of the end of the first quarter. So that's still really bad. We also saw last week, we mentioned, if you missed that, that the pandemic era spending has been completed. All that savings that they got last week, that's done. People have spent that money. So we're seeing a slowdown in discretionary spending also, and that's not surprising. So we're going to be watching that. That's a good thing. That could show the strength of the economy as we go forward. And then the last bit here was just the jobless claims that we got last week. Those fell by $10,000. I mean, 10,000, sorry. They fell by 10,000 with 222,000 people filing for unemployment benefits for the first time. Also, the other side of that, you got the initial claims, then you have the continuing claims, people that are continuing to claim unemployment. Those actually went up in this past week, and those are at 1.79 million people are still receiving those. So what does that mean? What's the bottom line? It means that those initial jobless claims did decline from the previous week, but we're still in that breakout territory above the low levels that were reported in the past 9 out of 10 weeks. And so this is moving the direction we want. All of this is lining up the same way. That data follows other recent reports that suggested there's softening in the labor sector, weaker expected job growth in April, declining job openings, lower quit rate. If all of that continues, we're going to see pressure put on the Fed to cut the Fed funds rate, which is what everybody's waiting for and excited about, at least in our industry, in housing, in real estate, in mortgage. That's a good thing. So their mandate, if you don't know, the Fed's mandate is a dual mandate, and that is price stability and maximum employment. So with those two things in view, we do believe we're setting up for lower rates this year. So this week, what are we going to see coming in that we'll update you on next week? That's going to be the April's existing home sales. That's going to come in on Wednesday, the new home sales on Thursday, and then the latest jobless claims will be reported on Thursday. We're also going to get the minutes from the Fed's latest meeting. Those are going to come in on Wednesday. We're going to have a parade of Fed speakers throughout the week. Always has potential to move markets. So you're going to see things move this week. We are trending back in a positive direction for rates. So that's where we are from the technical standpoint. Bottom line, David, is it's still a great time to buy. You're still really going to make a good decision by jumping into real estate. It's not timing the market, it's time in the market, and you got to be in that game to win the game.
So it's so interesting. I remember giving you a compliment, and it is a great compliment. You're in the top 1% of lenders, and people are like, well, number one, who's Monty Felts? And number two, when I gave you that compliment, you go, David, it's really not about me. It's
Yeah.
about having the resources and having the information and having this at my fingertips. And I mean, I'm sure there's times when you're minute by minute checking these statistics and numbers, but certainly on a daily basis. And the reason that you are so good and proficient at what you do is because you stay on top of it. But for consumers, I just had two questions real quick. One was, what do they need to keep an eye on, and what should they be keeping an eye on so that just for their own well-being? And then, you had alluded to it's always a good time to buy a house, but maybe you could just share why that is. It's always the case that the majority of the time in your lifetime. Somebody explained it to me this way. They said you're either in the real estate game or you're out of the real estate game. If you're out of the game, you get no upside ever. And if you're in the game, you need to understand that it's like a roller coaster. There's going to be ups and downs, but overall, in the long haul, you're always going to be better. And you shared a story about 4 families you did a little research on. So I guess I just asked you three, but maybe you could try and knock those out. Those are kind of long, but see what you could do.
Hey, yeah, that's great. So what should people be looking at day to day? That's their spending, their budget. I wish more people were on a budget, not a scarcity mindset, not a cost cutting mindset, more of an abundance mindset of where can they bring value to other people. That's the way I live my life. There's been multiple people that influence that. Ben Wilson out in Nashville, Garrett Gunderson up in Utah. These guys have taught me to live with content and value in view. How can I bring value to other people? So I think everybody can do that in the same way. They can look at their individual budget and say, how am I bringing value? Does this bring me value? If not, why am I doing it? So that's something we can control as our own houses and learning from other people that are doing it well. Your question about the four families, yeah, we did that. We pretended that they had bought during COVID in the 2 and 3% rate, which is what they did, but we pretended that they were paying 8% rates for all these 4 years. What would it mean now? Did they make money? Did they not make money? And it was overwhelmingly yes. They made 60% return on their money, 100% return on their money. One of them made 150% return on their money. So it was always good no matter what that rate was. The reason being is interest rate is the only thing the general public knows, but appreciation is so much more powerful that when homes go up, like we've been saying, 5 or 10% a year, there's no interest rate that's going to overwhelm that. That's just interest on the money you borrowed, but the home's value went up 5%, 10% in a year. That's so much more money on your money. So that's what you've got to understand. If that doesn't make sense, I think you got to talk to somebody like me, somebody like David, somebody like our realtors, Amy Lee Lucas in Knoxville, or Haley Van Edom, or the different people in the different cities you're going to say, what am I looking at in terms of a purchase price for this kind of a house? Really, really helpful.
Thank you so much for sharing that. And
Yeah.
then today for my tips, I'm just going to keep it really simple. And by the way, for all of our members, I want you to understand we have 350 realtors that Terry Gilliam has personally vetted out. We really strongly encourage you to use all of our realtors. And the reason that we want you to use our realtors is because they have experience. They deal with relocations on a daily basis. And Monty and I have talked, we've become good friends, and we talked on a regular basis, and we've shared how these horror stories of, somebody says, well, I got to have loyalty, it's my cousin, or I got to have loyalty because it's my mom's boyfriend and he's got his license. And it's just, you really need these five things. And Monty is definitely an expert, and Monty actually trains realtors as well. And he is a lender, but he helps realtors to increase their business. And not only he's not focusing on them increasing their business. What he's focusing on is increasing their knowledge, increasing their ability to serve and to give back and to be a really strong realtor, not just trying to make more money and more sales. So the top five things, Monty, are, they got to have market knowledge and experience. I'm a local realtor here in Las Vegas. I specialize in Vegas, and I've been here since 1975. You're not going to find very many realtors in our city. A lot of them are going to say, oh yeah, I've been there 10, 15 years. I've been here 50 years. I've seen it when it was 160,000, and now we're over 2.5 million. I know this city like the back of my hand. Some of the realtors will say, yeah, I've been here for 9 years and I know this city better than anybody. Not true. The second one is effective communication. You can tell. Can they have a conversation? Listen, if they can't have a conversation with you and they can't have some personality and make you smile and make you have a warm and fuzzy feeling, that's probably not the right realtor. They don't know how to communicate. And by the way, if they don't know how to communicate with you, how are they going to communicate with the listing agent when they go to make that offer and negotiate? That listing agent might be like, you know what? I don't really like that guy. I don't want to deal with him. And he can somewhat choose that. Number three is compatibility and trust. I always had a saying that you got to know, like, and trust who you're doing business with. And you're going to feel it right away. That first 5 seconds of an impression really, really matters. And I think that's why me and Monty instantly became good friends. We had a feeling of trust. We trust each other. That's where you start. So if you don't feel like you can trust them, they're out. Reputation and references with Google and with all the different assets that you can go and look at, you can see what kind of production have they done. Have they made, they said, well, I had 2 home sales last year, haven't sold a house this year. I have five homes under contract right now. I mean, I am a successful agent. I work really hard. I work 16 hours a day. This is not an easy job. For those of
Mm,
you who think real estate is easy, you're crazy. But and then of course they've got to be able to negotiate. And
mm,
negotiation to me is personality. Like you have to be able to have rapport with the listing agent. And if you're going to negotiate with somebody, you've got to be able to communicate. So you'll be able to tell if you think that they can negotiate. So those are my top five things. And we've been blessed with Terry Gilliam vetting all of our realtors in our network. They already have all these skills. Is there anything you want to add about real estate? Sorry, I didn't mean to get on a rant there, but I do get pretty passionate about having good realtors working for you.
yeah, no, you're so right, David. It's the story of my life. I work with hundreds of realtors, know hundreds of realtors. They're not all created equal. That friend from church who has their license is not the same as the professional that goes out, has a team of people they execute like a Fortune 500 company would. They have processes and standards that they hold themselves to. So you're going to get what you pay for in that respect. So I encourage people, ask me, let me tell you the difference in their numbers, find out before you assume everybody's the same thing. A realtor's a realtor, or before you think I can do it without a realtor. I've got 100 things that you can't do if you're not a realtor. So yeah, great points, David.
Thank you. And lastly, since our co-host is not with us today, I just had a 30-second blurb, and then we're going to wrap this up because I said we'd try and be respectful of time. But Monty, it looks to me like everything I'm reading and all the stories I get out of California, I really feel like the California politicians and the government of California is doubling down, saying how great they're doing. And they're going to continue to do the same things that's driving business away, that's driving people away. And a lot of the people we talk to, they can't
Mm.
wait to get out of California. And I am amazed that they feel like they need to double down on all of their policies. Um, it's insane to me. I mean, are you getting that same vibe from California like I am?
Yeah, I would say the little bit that I'm reviewing that, which I spend my time in the good. I don't spend my time in researching things that
Good
are not
advice.
good. So
Yeah.
yeah,
Yeah.
I tell it, I would say just make the move. You'll never regret it. As we often hear people say, I wish I would have done this before. So
Yeah.
look under that rock, go to that place. I think there's a whole world waiting on you outside.
Absolutely. And here we are. We're at the end of episode 2. Your money does matter. And, it is your money. It is your decision. And if you're going to be making, this is the last thing I want to close this show with today. This is the biggest purchase of your life. This is probably going to be the biggest transaction you ever make in your lifetime. And you're giving it to somebody that has no idea what to do. They've been licensed for 4 years and they've only sold 2 houses. Um, please be careful. We caution you on that. Your
Mm.
money does matter, and this is a big decision. So make sure you have professionals like me, Terry, Monty, and all of our realtors. And again, we appreciate you guys tuning in. This is a new show. We're going to continue to give you guys what you want. Please like, comment, and share our show. If you want us to touch on other items that you're concerned with when it comes to money matters, please definitely chime in. Monty, thanks. It's always great to do a show with you. I hope everybody has an amazing week. We'll see you next Monday, which is actually Memorial Day. If you're planning on being out of town, don't worry because we always record our shows and then we share them later on down the road. So have a great week. We'll talk to you soon. Take care. Bye-bye.